so let's talk about the banking sector. Of course, they are the folks are the center of it all. So when there's a recession, of course, you know, those who will bleed will be the banks, because everybody wants the little piece of money they got in the bank for consumer goods and everything else in between. Pay school fees. Oh, by the way, schools are resuming next week. So just keep that at the back of your mind. Bolahan Joshua is the Chief Operations and Information Officer from Fidelity Bank. Good morning. It's good to have you here.
Good morning. Thank
you. Yes. Very quickly, when we were in recession, how are you folks in the banking sector feeling it?
Well, I mean, I guess all sectors felt it. I mean, we felt it from a lending perspective. We felt it from a deposit perspective. We felt it from a consumer disposable income perspective. Amazing.
Now that we're saying we're exiting recession, so talk to us about first quarter and the second quarter. All your banks did well in second quarter, including yours. So that's good news. At least no bank is going under as we speak. So that's good news. But how did we get both our credit and debit side balanced in such a way that the numbers look good in second quarter?
I think critical for the second quarter was there was improved, FX liquidity. That was very critical. The rates were there was more harmonization around the rates, more clarity. The central bank did quite some work clearing the backlog of the retail demand, the introduction of the I&E window. And so generally that improved the performance of trade generally. Trade volumes increased across the industry. And so people were able to plan better. I mean, a lot of people, I think, had been going to the parallel market to source for school fees and all that. But with the interventions done by the central bank, all those came to, a better landing. So overall, we had seen the impact from the second quarter performance. So we're not too surprised when we saw the GDP reading, because we knew it was a better quarter.
What work did you bankers have to do on the ground? Because almost all of you had big monies locked up in power sector, to discos, to gencos, to power the distribution of oil marketing or oil producing firms. So where is this really from in terms of trade and everything else? What work did you have to do to make sure that you still give some credit, then deposits still coming?
Okay, so let me put this in perspective. For every 100 naira you take from a depositor in Nigeria, you have to invest 30% of them in liquid assets, because the liquidity ratio is 30%. You have to keep 22.5% as cash reserve, but the actual cash reserve is actually about 30%. So really, for every 100 naira you take, you have less than 40 naira to lend out. So when people say, oh, I've put 100 naira in the bank and I think I can go to the bank and get a loan of 80 naira, for example, it doesn't really work that way. But from a monetary policy perspective, there was a lot of tightening. So funding costs were up in the industry, but also the yields on government securities were very high.
What other cost challenges, what other challenges did you guys went through and to be able to come up with some earnings that look good on almost all the both tier 1 and tier 2 banks?
I think cost optimization was very critical for a lot of the banks. People went back to the drawing board. I mean, during the recession, even families tightened their budget. So corporations to, look at their processes, review it, and say, look, what can we cut off with? What innovations can we come up with to become more efficient? So, I mean, the banks had to do that from a cost optimization perspective. Secondly, from a balance sheet management perspective, I mean, in a period where liquidity is shrinking, you have to prioritize what you do with the liquidity you have. So that's 2. And then 3, from a digital banking perspective, I think a lot of the banks improved on their digital play, invested more on the electronic channels. It reduces your cost because you need less personnel to service customers at the branches. And then it improves the convenience for the customers because they can do their transactions much easier.
We're going to keep an eye on your bank. Your Eurobond is, you got to make a decision by 30th of September this year as far as the Eurobond you have over there, the global marketplace. So we're going to talk about this Eurobond around later this month.
Thank you.
Thank you for coming. That's the Chief Operations and Information Officer at Fidelity Bank, Bolahan Joshua, wrapping up the program for us today. We're not done with the GDP yet. We're back in the next 24 hours. I'll see you tomorrow.